not really live. A few hours delayed live feed. And all right, that's nice enough. Let's look at today's analysis, going through my trading framework. It's array, ARRY, on the NASDAQ. I have my 10-year monthly candles. And what I see right now is there was this nice resistance line right here. If I could get it straight. Okay. And I like always starting at the extremities and working my way in. Here seems to be some support around the $2 level. And for a while, $8 was pretty much what the price would be for that stock. There's smaller, more intermediate term patterns that exploded back then, giving measure moves and reaching their targets along the way. Actually, could be breakout line would have been here. And that's it. Moving on, got more consolidation. Here's what I call support turn resistance. Is the breakout support here, broken out of, now becomes resistance. Prac session goes, reaches a target, may or may not reach its target, then bounces, tests it, and now that has become what I call a wall. And wall will either slow you down, or after that you'll bounce off it and go back in the opposite direction. Either case, it's always two possible directions. And then it would just continue out there. Went back here, resisted at around that $7 level, and then came back down to test that wall and giving an indication of a top formation. If you were back then, you could have thought this was a top. Look at that. Oh, nice top. And no. Here you have this, I think it's a spinning candle, Japanese candlestick. And all this noise outside below the breakdown line identified as the wall. And you see right now that you did not have a breakdown. And you would have not short sailed this. You might have here, if you were on the weekly, you could have, there's probably maybe some weekly candles here that could have confirmed the move down. And what we could do is go check it out. So let's go back on, let's go on the 5-year and see if there was that noise. And yeah, we kind of see it a little bit here. So this is the noise below the breakdown line. Even here there's some noise. So what you could have think was a breakdown here. Well, on the weekly, if you would have put your line here, then this is just noise coming up. On the weekly, you would have probably put your support here. So you would have not played this. And you would have just not got triggered out there. And here you might have identified this as support. And here you would have had a false breakdown. And then price action goes back up. On the daily, maybe more, even more so. It's just that support, the monthly candles will give you different support and resistance levels than the weekly would, and even more of the daily. That's why I call it noise, is all that intraday noise. Even if you have a daily close, and the close is what is important, below a breakdown line. And on the weekly, same thing. Weekly close under the breakdown line, it's a valid breakdown. But those candles on the monthly, they aren't breakdowns. They're the closes of those candles is the resistance line. the true and tried resistant line, or I believe it's what it's even. It gives you a more precise, gives me more strength in that resistance line that the monthly candles decided to not close above or below. And that's why there's, I believe, to have a higher probability of success using those as resistance and support lines to reach my possible targets. Then I give less credibility or less importance to weekly, and even less so to daily, wherever they bounce the price action. It is support in that time frame, but if you pop out the time frame, that support is not as valid. All right, so I digressed. Let me see if I could put 1 year. Sorry about that. Let's say I put 1 year, 5 years daily. There we go. And just to see about that noise. And here's where I marked the X. And even see these daily candles, at least they closed above the breakdown line here. Still some noise. And yeah, you would have, if somebody would have been playing maybe on the week, let's do this, like let's say you're playing 1 year daily. Say this is 1 year daily, and then you're seeing a downtrend in the daily, and then you're seeing maybe a bottom formation or just a continuation stage to go even more down. And you would have drawn your line, your support. You could have drawn it here. So you could have thought you had one breakdown here for that top formation. Put it straight. And here we've been triggered out. We came back here, come back. And it happened again. Maybe it depends if you now you see you might have changed your mind, said the support is a little lower. And it has become a little lower because now that's resistance at sorry. And this could have been a channel or falling wedge. See, that's all this art, putting the lines in, redrawing them. And you keep doing it until you get closer to what you should be seeing. And with practice, I guess the really good chartists, they could look at a chart and instinctively they just know right away. And they have no difficulty, no hesitation to where to draw the lines. I'm still working that through, and I'm still practicing to see if I can correctly identify again and again chart patterns. I just don't want to get into a draw those lines and not practice them, and just maybe if I draw them wrong and then I keep repeating drawing them the wrong way, well, that's not good either. So I always try to rethink and make sure that I'm doing it the correct way. So you see, that could be a falling wedge, and instead of breaking up to the upside, like sometimes it is a reversal pattern, it's just a falling wedge breaking down below support line. And you could have also been triggered out here. Well, it's still staying in there. All right, so see, more noise, more patterns to play on the monthly, on the weekly, and even more on the daily than on the monthly. So let's just go back, and we're back to our 10 years. And right here, we have what seems to be a breakout. We have some important resistance right here at the 8, about the 8 level, 825 level, and we had a breakout candle here. This looks like a big, strong measured move. I like it if it would have tested more here, more of a launching pattern right here than having the launching pattern here. This measured move brought it up all the way to this resistance line. I would probably give more value to this move going on the upside. So not officially an A++, I would have played. But if the risk to reward would have pleased you, let's see. Risk to reward would be pretty nice on this one because this is the breakout candle. You'd enter here at the end of the month, 877, and then you put your sell stop here at 778. So it's about $1, and that's your risk, and your reward is all the way here, $1 to 1360, 880, about $7, 650. So you're risking 1 to win 6.5. So very good risk to reward ratio. And did we have buyer's divergence? No, or barely. Neutral. No bearish divergence here. Higher high, higher high, and higher high here. So it's look good. Let's move it along. Whoa, what happened here? One candle, two candles. No, came so close. You would have still been in the stock right here. You've not been your buy stop. And then it goes down, and then you're triggered up. So that target was missed by not much. And that's why you have your money management protocols. Don't lose more than 1% of your total NAV or 0.5%, and live to see another day. Did I misdraw those lines? I always come back to these cases to see if I was too greedy on the estimation of the pattern. Because right now I'm drawing my lines, but before I actually pulled the trigger and I start putting, let's say I would have decided to buy. I would have put my lines here, but then I would have really zoomed in on the price action and put the exact amount at the correctly at the what was the actual resistance and support. Sometimes when I do the podcast, I don't take the time to be extra precise, but for the time that I would get into the trade, I would do that. And I would have not missed the target by inches. In this case, I think no matter what, I would have still not hit my target. And after that, price action went back down. You got triggered out because your sell stop's here. More consolidation. And then you have another 1, 2, 3 months pattern here. Breaking out, probably playable in the weekly because you have more candles. And then you're just going back up to here. Where are we at now for array? Well, this could be a top. Higher highs. Lower highs, RSI, bearish divergence. Could be retracing back down to previous resistance turn support around the 1250 level. And that's it. There's no play right now. What I could do is just set some alerts and get my attention if these get triggered. And let's see how the next candles could affect this chart, morph it, or start defining the range of this either continuation pattern or reversal and back down to test more support back here. All right, that looks kind of a mess with all these lines, but with one right click, remove all trend lines. Hey, it's clean again. All right. See you later. Ciao. All right. Ciao for real now.